All right, guys, let's get started.
Guys, good luck with everything.
Thank you, Joe. Thank you, buddy.
So, just a couple housekeeping tips. We'll use the chat box tonight. Does it for everybody see where the chat box is on their screen? If you would just type in hello, that way I know you found it. And you can put your questions in there, and periodically I'll read them out to Marty. We'll go through the SJI things here. And thank you, everybody. And then I'll introduce Marty and we'll get going. SJREIA is New Jersey's largest nonprofit real estate investor association. We currently have over 850 members. Oh, maybe not. Okay. Our member benefits include Home Depot discounts, post your properties on the website for free, AAA big discounts, and if you need a list of discounts, email info@sjreia.org and Lynn will get you that list. National REIA benefits are at nationalreia.org. There are 18 companies there. If you cannot find them or you would like a emailed list, again, just email info@sjreia.org and Lynn will get that over to you. Our meetings are great for networking. Even on these Zoom meetings, I've found that, I've received calls after meetings just to network and try to put business together. So it doesn't need to be in person, but the networking is definitely a huge part of this organization. So you don't even have to leave the comfort of your home. We have 9 webinars every month, Monday through Friday, 7 p.m. Visitors are welcome. And Saturday mornings are for members only. And you can find all that information right on the sjreia.org website. Our membership options currently are $150 for an individual, $175 for a 2-member household. And we have a new month, $20 a month digital membership for those that want the digital. And here's our contact information. So let me get into, if you have any questions about membership, please feel free to either post a question, email me, or email Lynn. The SJREIA disclaimer: SJREIA does not exist to render and does not give legal, tax, economic, investment, or financial advice. SJREIA disclaims all liability for the actions or inaction taken or not as a result of communications from or to its members, officers, directors, and employees. Marty, you ready?
I'm ready, willing, and able.
Okay, so tonight, guys, we have Martin Chera from Express Capital Financing. Marty has been an owner of Express Capital Financing for the past 8 years, helping his investors and clients in building their wealth in real estate. Martin has a deep understanding of their inner workings of real estate business operations. He services the needs of investors, helping them identify a qualified property to attain their financial goals. Martin's business and life experiences make him uniquely qualified to service the needs of investors. Martin efficiently uses his knowledge and expertise to walk his investors through the stages of selling and buying a property with a market analysis of the return on investment and where the market trends are going in today's economy. Martin utilizes the business acumen he acquired over the years to help his investors buy their properties for a maximum return when they are ready to exit and acquire additional properties to fuel the growth of their existing company. So without further ado, it's all yours.
Great, great. So thank everyone for joining. My name is Martin Chera. I'm the owner of Express Capital Financing. We're a father and a 2-son team. We are based out of Brooklyn, New York. However, we lend nationwide. What we do is we provide capital to real estate investors, developers, contractors, flippers, whether you're looking to buy and hold or to fix and flip, especially in today's real estate industry. So I'm just going to go into what's happening in today's market in 2021, what to expect, where to find some good properties, how to identify a good property, and make an informed decision. So, who would have predicted a worldwide pandemic? Who would think a global pandemic, statewide shutdowns, widespread unemployment would fuel a real estate market to an already red hot housing market spanning the country? 1 million plus people already in America have already been vaccinated, and that's slowly going to bring back the economy for 2021. The housing market will continue to hold strong as the rest of the economy rebounds. Real estate investing is one of the best investments anyone can make in their lifetime, where it builds passive wealth, owning a property that sets us apart from other investors, from the average person. Today's statistics right now, it's what I've gathered, 3.5 million people are in forbearance. And that's just government loans that are recorded, not hard money loans, not a non-bank lender like myself. Government loans, only 3.5 million people are in forbearance. 10.7 million are unemployed today. 376,502 people are in foreclosure. The government is slowing down the foreclosure and the moratoriums and the eviction process to what I'm told now it's till March. And that's ever going to make the economy in a way stronger and more volatile. Mortgage rates are ever so slow, and the government plans on keeping the rates low to offset the economy. Since sellers are getting more than the expected selling price, and that's making new listings hopefully to come on the market to make a more balanced market and home sales. From 2005 until now, 2021, 70% of those people are going to be new home buyers. That's what the expected, that's what we're seeing. 70% will be new home buyers coming to the market. Closer to home, people want to live in a, to live their family. Now with this unfortunate pandemic, a lot of emotions have came to play. People, landlords can't handle being a landlord anymore, and they want to become investors. Investors want to become landlords. People want to live next to their family, closer to their children. So it's bringing a lot of emotions that's stirring the growth in our real estate industry. Expensive cities, unfortunately, like Chicago, New York, are not in big demand, so we should stay away from those from the not the big demand cities. Most homeowners are making offers even sight unseen. They're knowing that with the pandemic, they can't even go in for a walkthrough. They can't even inspect the property. So it's getting so hot the market today that they're making offers sight unseen through videos. Sometimes they're even trusting their realtor for whatever reason. 2021 is going to usher a new era of price competition for real estate agents. In November of 2020, 54% of those home buyers were faced with multiple offer situations. It's a decline from October, which is great, and that helps. It's good news for us investors. If homes are priced right, it's good condition, desirable neighborhood, a good population, and it's growing, it will sell quickly. And that's what's happening right now. I'm getting calls every day from my investors, and they want the money, they want the term sheet. I want a proof of funds. I don't want to lose the deal. And that's what we're hearing. And in a way, that's a good thing. And I want to bring up that when the pandemic hit our country, January, February, March, whatever date that everybody agrees upon, a lot of hard money lenders, they either shut down or they paused because we didn't know what was going to happen. And then when we saw in June and July that, as much as people were staying home, they were being cautious, there was still growth in real estate. People were buying, people were flipping, they wanted to continue their everyday lifestyle, and they knew that with uncertainty creates opportunity. And by the way, in recessions, millionaires are made, and in a depression, billionaires are made. So they're realizing that opportunity. So with that said, there was a growth in real estate, and that's why hard money lenders came back into the arena in around May or June. They saw in 2007, 2008, that's where financial crisis. So there was no hard money lenders then. Banks weren't lending, they were slowing down, there were less leverage and high credit scores. And that's when hard money came into effect, when there was a niche that was needed for investors to buy properties. However, today it's not a financial crisis. It's more of just an unfortunate pandemic crisis. So it is affecting everyone globally. But with that in mind, it's, investors are there. They're realizing the opportunities, which is great. I did some statistics myself, and I saw that 14.5 million people are expected to move across country. 14.5 million people are expected to move cross country. We haven't had that surge since 2004. Why? Steep competition has increased. The sale listings, owner occupied owners, home buyers are willing to pay more for a new listing because of a desirable area, desirable home, not having a stale listing, moderate price range, and affordable interest rates. That's what's creating the surge. So going back to what I was saying before, 70% of not gonna say word investors, new home buyers are coming to the market with not stale listings and of great interest rates of 2 to 3% are making it very enticing for everybody to be buying out there in real estate. We all know supply and demand affects the economy, affects our investment strategies. And I want to get into a little bit about supply, what's happening in the market, and then the demand. We are under in supply 2.5 million listings than normal. That's a great amount of money, a great amount of listings that's not there. 40% down. We have a 3-month of supply and normalcy is 6 month. So there's very little housing listings out there. And what are the reasons? Well, they don't want to move yet. They're afraid to have people in their house to walk in and see the property. Maybe they're not sure what they want to do, whatever those reasons are. So we are seeing a very short supply of housing. And that's what's driving the prices up. In a way, it's good. Nobody likes to buy high. I get it. But in a way, it's good because the new after repair value is ever going to go so higher because of that demand. There's very little supply, so there's a great demand. So that's what's creating that. So when I tell my customers, they're telling me that I got outbidded by 10 or 20 grand. Sometimes I say, look, isn't it better to make 50,000 instead of $70,000? You're spending 20,000 more, but your ARV is higher and your profits will be a slightly less, but you're in control of the property, whether you want to keep it for passive income or flip it. So that's just, some of my thoughts. There's not enough listings. Builders can't build. So that's what the situation that we have with the supply. Also, just a little statistics, there's a website called Black Knight, and Knight is spelled KNIGHT, blackknightinc.com. That has great mortgage data of what cities in what states that are hot. We're looking for the demand. Where are people moving to? So we're looking for cities in a hot state that has great mortgage data of where people are moving to, and that's what all investors should be focusing on. We all want to invest in our back door. It's great. But like I said before, I live in New York. New York is not a place to be buying right now. Jersey's a hot state, yes. If you live in Jersey, should you be buying in your state? I mean, I would hope so and think so. But for the investors that want to focus on out of state because, prices are low, less competition, less property taxes, more yields on your money is a good idea. But just getting back to blackknightinc.com, it provides great mortgage data of where the hot cities and states are that people are focusing on moving or already moved there, I should say. Another thing that's affecting supply is migration patterns. We want to focus on where the people are moving, not where they're living, where they're moving to. Moving cost, they're moving for a lower property taxes, a lower cost of living. And like I said before, there's a lot of emotions that came into play, whether they want to be a tenant, they want to be a landlord, maybe, older folks want to live next to their children or their grandchildren. And, with this pandemic, a lot of people now are working from home. They don't need to work, a few blocks or a train ride to their office or their retail center anymore. Now they can work from home. So they want a bigger living space. They want a bigger living space where they can work and live in their homes. And that's creating a great migration move. Moving companies like Ryder, North American Van Lines are now, believe it or not, putting up data of where people are moving to. Like, for example, New York to Florida, you're going to see a 48% surge of people moving. That's where we should be focusing on our flips or our buying or holds so we can make a good return on investments. So supply in 2021, it's going to increase. The prices will go down, unfortunately. Why? Because the forbearances are finally going to hit the market, and that's going to make the market more affordable for home buyers and for investors to either rent or to buy. Um, excuse me. Um, Unfortunately, those 3.5 billion forbearance people that I mentioned, and like I said, it's not even hard money lenders, a non-bank lender like me. Those not even recorded. So those forbearances are high. They're going to hit the market. I always tell people every day, it hasn't hit them. We're not even at first base yet of foreclosures, pre-foreclosures, the evictions, forbearances are not even hit the market yet. Just a little inside information as a lender, we talk to banks a lot and see what they're doing and what's happening. And some of the bankers that I'm talking to, that they're saying that once they finally get a bank-owned property, which is called an REO, they're not going to flood the market. They don't want to flood the market. As much as they want to get paid back on their money, they don't want to hurt their portfolio. They don't want to flood the market and hurt the real estate industry, which is not just their portfolio, the market, the prices. If they flood it, it's going to become a buyer's market, and then prices will go down dramatically. Deferments, for the folks out there that are in deferments, that are hopefully it's going to get paid on the back end of the mortgage. If you're lucky enough to do it, that's great. But those forbearances, who are very soon are going to be faced with, it's almost a year that the banks have postponed you. It's going to hit you soon. So you're going to have to think about what to do. Am I ready to sell? Do I want to sell? Do I have enough equity in my home where I want to sell? But those are going to hit the market, which is going to be unfortunately sad for those people, but it's going to be an opportunity for us real estate investors. And then we got the demand issue. Again, like I was saying before about the demand, we want to go where they're moving, not where they're living right now. We want to go where they're moving. We want renters, we want buyers. Millennials take up 52% of the renters market, believe it or not. 18 to 29-year-olds are millennials, and they're taking up 52% of the market, which is great. Right now, they're living at home. They lost their jobs. Maybe they lost their businesses for whatever reason. But soon, when they get their jobs back, that's going to create a demand because they need a place to live or a place to buy. So jobs will come back. And when that does come back, that's going to be a great thing. Let's talk about population growth, folks. Other countries, like I heard, like UK and some other, foreign countries, their population is decreasing. America, 2 million population growth per year. So when that keeps on going and going every year, there is a demand for renters and buyers, and that's what all investors should be focusing on. Where is it's there, it's happening every year. We're not decreasing, thank God. So we should be focusing on the population growth. Immigration, it's always been there. It's going to happen now with this new administration. A lot of immigration is going to come in. They're going to be needing to rent homes, to rent properties, and that's where us investors need to be focusing on. So I hope everybody gave a lot of information over here. I just want to say that there's going to be many opportunities for investors now and unfortunately for the next 1 to 5 years. So make sure your deal works. Numbers don't lie. Only emotions do. Stick to a plan. Figure out your plan. Do I want to be a flipper? Do I want to be a wholesaler? Do I want to be, just a buyer, providing the passive cash flow? So stick to a plan, because if you're just going to say, I'm going to buy and I'm going to figure it out later, plans don't succeed without a successful plan. So stick to a plan, get inspectors, crunch your numbers. It could be a lot of pressure to make offers, because deals are going to be hitting you from banks and from realtors and from REOs, or wherever your pipeline of leads or properties are coming in. They're going to come and flood you soon, but don't get pressured. Don't get pressured into rushing a decision. A real estate deal is only successful once you actually close on the deal and you sell it. So like I said, don't get rushed into it to buy your next deal. Some investors, they tell me they're doing their first flip. Oh, Marty, I got a second deal. And I say to them, you just bought it a week ago. You just bought it a month ago. You haven't even done your rehab yet. You haven't even completed 50% of your rehab. Sometimes, I'm not much as I want to, make money. I have their best interest at heart. And I'll tell them, slow down. Be successful, go through your rehab, make your profit, take that profit and go into the next deal. And there's going to be, like I said, many opportunities. So don't rush in going into it. Be detailed oriented as a new investor, because it's only good and sellable and successful as on the execution. You can make many offers a day. Yes, you could. It's going to be a buy market really soon, because there's going to be a lot of supply coming into the market, and that's going to be a buyer's market for us. And with that said, you're going to be making offers and hopefully be successful. Um, and that's about it. Any questions, I guess, Max, or you want to say something?
Yeah, I just want to add in a little bit, I just want to add on to what you're saying on 2 points. So the first one I want to go into is, right now we're talking about how there's so many forbearances and people that are not up to date with their mortgage. And at a time like that, what you would expect to see is, right, so at a time where the markets are hot, you would expect, like, hey, if I know I can't make my mortgage current, well, why don't I sell now and get out of my situation while I can, as opposed to, what normal human nature is, which is to procrastinate and move it along and move it along and move it along until the last minute. And then when everyone's trying to do the same thing that I'm doing, now there's going to be a lot more properties on the market. So it's not just the banks. It's not just the for sale by owners. It's not just the people that have been trying to sell. It's a whole bunch that's kind of going to come in one shot, right? So even if let's just say, us lenders all got together and said, hey, this is how we're going to release our foreclosures in order to make sure that we don't hurt the market, right? We still have to account for the people that are not part of the banks that are procrastinating. So why do I mention that? Because right now at a time like this, personally speaking, I may want to look for the deals that have a shorter time on market where I can get out of it as quickly as possible, because what happens if the forbearances all come in one shot, right? So it's a matter of understanding where your market is, how your market's going to react. Another thing that I kind of wanted to touch base on is the retail market, right? So the buyers, what are they going to be? Does it change for us, right? So there are a few things that have changed, and I'll tell you what they are. So I think you actually mentioned this for a little bit, that a lot of people now are working remotely, right? So let's just say I work for a big tech company. They might have gone completely remote, and not just for the pandemic and not just for until further notice, but actually indefinitely. And what that allows me to do now is to move wherever I choose to live and wherever I want to be. That means that I also may want to have an office in my home. So if you're a flipper and you're looking to add value to your properties, you may want to look at, hey, how can I make this more comfortable to work from home? And again, the motivations behind why people are selling and buying, they don't change. They only expand. So what I mean by that is, job relocations, right? There's going to be more jobs that come around. We have a lot of people that are out of a job. Job relocation, if I'm not mistaken, was the number 1 to 3 reason why people buy and sell property. So if we know that there's going to be a lot of that to come to the market, well, people are probably going to have to move for their job if it requires them to be at a location. Some people may not, may be remote, and now they can go back to their family where they were. Maybe they moved somewhere else to begin with. So all these emotions are a good thing for the market. People shop logically, but they buy emotionally. People make their decisions emotionally. And that's kind of where we just have to understand your markets. Every market is going to react a little bit differently. Like we mentioned earlier, Texas is one of those places they usually just brush their shoulder off and everything's fine. But, and I actually was speaking with someone, one of my realtor friends in Texas today, and she was telling me how she was in a multiple offer situation with over 50 offers on a single family home. That's how much the market has dropped for properties for sale. So, and right now, like we said, the rates are so low. It's just a big motivation. I want to buy. So for those of you that have those properties that are able to, this is your high point. This is when you may want to prepare those properties, get them ready and sell them off. If you're looking to be a holder and you want to anticipate growth in your market and you want to collect that cash flow, places like New York may not be the worst case in the world to look now, because you may find a really good deal and be able to buy it low, right? So it's all about your strategies and moving with it. Real estate is not a consistent business that stays the same year over year. And we have to always adapt to that and make sure that wherever the market is, we're aligning ourselves to be in the position to win.
Great information. I just want to add to folks also, maybe, everybody's asking, where can I find properties? Where can I find properties? So I want to just share some, maybe some best insight and practices, what I tell, my clients and investors every day. We got to be creative. There's a scarcity of properties right now. So how can you be creative? And I always tell my clients, a property is not going to knock down your door and say, buy me. Here's, you're going to make 50 grand, buy me, and that's it. Whether it's a subscription based of a lead generation, whether it's Hubzu, auction.com on finding properties, maybe a subscription base from foreclosuredaily.com, real estate IQ, whatever websites that give you a property lead generation. And we have some on our website too. If you go to our affiliate partners at expresscapitalfinancing.com and look up affiliate partners, because you need to have multiple facets on getting properties. So one way would be driving for dollars. Look for high grass, curtains that are open, maybe a sign in the window that's an eviction or foreclosure, maybe a container of garbage in the driveway where they're fixing it up, or maybe somebody passed away and they're emptying it out to get ready to put it on sale. So you want to look for these type of properties and then do a skip trace and find the seller's information and call them up and see what's happening. Worst case scenario, they'll say, no, I'm just fixing it up, or whatever they're saying. But the best case scenario says, you know what, I want to sell. I don't want to be a landlord. I can't rent it out. Or maybe my parents passed away, or whatever their unique situation may be. Call them up and find out what's going on. So that's one way, is driving for dollars. Another way, I'm going to, believe it or not, motivated sellers is Craigslist. They're putting up their properties up for sale themselves, not through a realtor. You're not going to pay a realtor fee. Maybe their emotions, like Max was saying, they're embarrassed to put a for sale sign because they're living in a neighborhood and they're embarrassed to tell their neighbors. Maybe they do have for sale sign up, but a motivated seller is putting up their own listing. And they're going to be motivated, which is great. You may get a good offer, a good deal. Find out their pain points. Call them up. Why do you want to move? Why do you want to sell? What's what their pain points are, and then hopefully you could hold on to that and kind of tell them what you do. I'm an investor. This is what I do. I'm looking to either fix or flip or buy and hold. I can close your deal in a matter of a week or two, and then go look at the property and see if it's a good deal for you or not. So Craigslist is a great way to do it. Like I said, affiliate, subscription-based property leads. Just going back to the subscription-based, by the way, a good lead generation of subscription-based was not only going to provide you with leads of foreclosures, pre-foreclosures, tax liens, probates. They're going to give you ARVs, and they're going to give you rental comps. That's all you got to do now, is just look over the property and do your due diligence, and you can make a quicker, informed decision. Going back to Craigslist, the opposite of motivated sellers, look up on the renter section in your area, your city, and your state, and you're going to call up that landlord and say, look, my name is John Doe, and I'm not looking to rent your property, but I'm a cash investor, and I'm looking to buy it. Are you looking to sell? Maybe he is dying to sell, and he's just putting it up now because he wants to get that cash flow going. So for whatever reason, he may be looking to rent it. Maybe you can hone in on that and get to his emotion. And if he tells you no, great. Here's my name. Here's my number. Keep it. Would you mind if I call you in 30 or 60 days? Maybe you'll be interested then. Feel them out. That's a great way to do it. Some other websites, I just like to mention, maybe like Realty Track, Property Shark. You could find some pre-foreclosures there, people that are in trouble, that are behind, I should say. And that behind may not be due to the pandemic. Maybe they just lost their job. And again, not due to the pandemic. I don't know what their reasons are, but you want to find out and then do that skip trace, because those websites are not going to give you the owner's information. Do a skip trace and call them up and say, I'm an investor and I see that you're behind X amount of months with this particular bank. Are you looking to sell? Are you looking to do anything with your property? Maybe you can make a strategic type of deal with them. Maybe, give them all the money that they're asking, but they want to stay 6 months for free. Or maybe find them a new place to live or to buy, can be their emotions that they need. Maybe they need 6 months to move out because they got so much stuff in the house. Whatever their emotions are, hone in on that, and hopefully you can make a good deal. So driving for dollars, good subscription-based websites, Craigslist, I'm going to say geodata, networking, like Lisa said, networking, is opportunity, is the growth. It's not what you know, it's whom you know, whether it's a landlord, an investor, a developer, a contractor, a flipper. Your next door neighbor could be your best networking opportunity because they may tell you about a property that's for sale in the neighborhood. So all these ideas are what you need. If you just have one method of getting properties, your chances of getting leads coming into you are going to be very slim. If you have a nice amount coming in, you're making offers on them, and then you'll have multiple offers out there with hopefully, some bites coming back, and you could quickly become a real estate flipper, developer, and all that. And just some statistics, by the way, when it comes to cash flowing properties, it's very hot. We're a non-bank also that provides financing, refinancing on any property except an owner-occupied property. So if you have an investment property and you want to get refinancing, you want to buy it, we could lend you on that. Why am I saying that? A lot of investors, they want cash flow. They want passive income. What's the benefits? The benefits are you got passive income. It's taxable as a real estate owner, not as a homeowner. You're going to get 27 and a half years of forced depreciation, which means 3.63% a year is automatically on that income is being tax deductible. So if you take let's say the income on the property is $3,600, just $3,600, right away you're showing the government 0% income, and that's all for you. You're not paying tax on that. So for 27 and a half years, whatever your project cost is, it's coming up to 3.63% a year is forced depreciation that you get. And then you got appreciation. Every year properties tend to go up 5 to 10%. And most importantly, the greatest thing is your tenants are paying your mortgage, not you. Your tenants are paying your mortgage. So that's why rentals, we call it rental 360, but owning a 1 to 4 unit is ever so popular. Bigger Pockets speaks about it a lot. Yes, you have to have multiple properties to have a nice income flow, but it's a great way to start building wealth in real estate.
I'd just like to add, first off, thank you so much for that. But I'd like to add in also on the locating deals, right? There's one other method that, I don't see a lot of investors do. It works really well for me, and it's probably a trade secret. It's like a realtor thing. The number one source of leads for a realtor is expired leads. These are people that have raised their hand and tried to sell their property in the past. Now, why do I specifically hone in on it right now? Because we're coming in from a position where if they were on the first off, no one right now is expiring unless they're really off pricing their home, which would mean you probably don't want to buy that house, right? So expires right now, probably not the greatest. But if you could go back a year and say, hey, I saw you tried to sell recently, prices have gone up. Maybe now we can hit that goal, that dollar amount you were looking for. You probably have a really good chance of putting together 2 to 3 deals out of that list, which, hey, look, that's a good amount of return if you're calling only 100 people. So just wanted to add that in as well.
Thank you both for that. We do have a couple questions that were posted. The first question is from Frank Barilari. Question is it better to deal with you, number one, buy cash than finance, or number two, finance on the purchase? If I like low offers and buy cash, can I finance at ARV?
So I correct me if I'm wrong, but I think the question is it better to purchase the property all cash and refinance afterwards so that you could kind of get in quickly, or is it best to purchase it with a loan?
Frank, are you there?
I'll treat it as if that's the question. Mm-hmm. And to answer that, I'll try not to be vague, but unfortunately, it probably is a vague answer because every deal is going to be a little bit different, right? So there are certain deals where you're going to be more inclined to say, hey, I don't care what it takes to get in. I just got to get into this property ASAP because I'm getting a solid deal and I just want to close on it. Versus a deal where it's a standard deal, you can purchase it, you have some time to work with it. And close out normally, right? So you're going to get a higher leverage on your purchase when you get a loan as opposed to a cash out refinance. Now, if you are doing, let's just say, a fix and flip, we will treat if you did purchase it cash, we will treat the refinance as a purchase if we're doing it right away. We actually, so one of my investors is actually right now, he buys properties from landlords that are not collecting rent right now. So he goes, Max, I'm liquid. I can handle that 6 months, a year, whatever it takes to wait for them to evict them and take on the property. So what I'd like to do is purchase it cash. So I don't have any overhead. And then what I'll do is once it's ready to be fixed up, I'll start working on the refinance and getting the capital to fix it. And that's, for his situation, that's actually a really solid idea, because now he's getting a really good deal on a property and he doesn't have any overhead right now. And the minute he needs to, he could go in and refinance it and fix it up and sell it for a profit. Now, again, every deal is a little bit different. So I would say that's where, calling us up and having that conversation, telling us more about the goals and strategy and what you would like to accomplish is going to really help us guide you in the right direction.
Thank you. So the next question talks about any insight as to when a buyer's market may come around. And I think this should be probably an open dialogue. I'm finding, what you're saying is not necessarily what I'm seeing in the marketplace. And just to give you my history, I've been licensed 27 years. I specialize in foreclosures. I, am contracted with government entities to handle their assets. So I've been doing this a long time. I'm very proficient at the process here in New Jersey on how a property gets foreclosed. When we went into COVID last year, we already didn't have inventory in the foreclosure space here in New Jersey. Inventory and foreclosures were extremely low. So now that we've not been able to do sheriff sales for a period of time, that inventory really hasn't gotten to a point where we're going to flood the market if they open it up tomorrow. So I'm just curious, is New York a little bit different than New Jersey in terms of processing? We're a judicial state. On average, it takes about 3 years for us to process a foreclosure here.
So it's more about once they all decide to hit, right? So it's each state has their own little a different process based on if they're judicial or non-judicial, like you're saying. But now, for example, once the first foreclosure is ready to hit the market, the second and third are going to be right behind it or not too far behind, because this is all happening within a short span of time, where between March and April, most people started to file for that forbearance or for that help. So it's not so much, this question is not a simple question of when the market's going to turn around. If you asked me this last year when this all first started, my answer would probably have been a couple of months ago, right? So it's hard to really say that. It really has to do with how everything starts to follow through. And I don't think any of us really know that answer, because for all we know, everyone could get their job back and all businesses start to operate back at full strength. And now they can start paying their mortgages and we don't have to worry about that. Now, the chances that all those people that are in forbearance for that to happen is not so likely, which is why we have that feeling that, hey, there is going to be a large number of foreclosures hitting the market, whether your market is strong or not. Back in 06 and 07, I keep referencing back to Texas because it's one of those states that's very different than the rest, right? New York had more foreclosures, I'm pretty sure, than almost any other state. I could be wrong about that. Please don't quote me, but we were very, very high on the list. And then you go to a place like Texas where they really didn't have any at all, right? And that the reason for that is that there are different rules and regulations in each place, such as Texas you cannot foreclose on a primary residence if you're living in it, right? So there's a lot of different things that can affect this. I believe that each state and even maybe county could be affected a little bit differently. But overall, we do feel that there's probably going to be more foreclosures, more properties hitting the market, which is going to cause a correction. And if not a correction, potentially even a
buyer's market.
But a buyer's market.
Right. I just don't see that happening here in New Jersey for a couple of years, only because it takes so long to process and we didn't have inventory to begin with. They have been letting the vacant foreclosures pass through in recent months, but now I see they're pushing adjournments out into March now. I guess they're going to wait for a little bit for things to settle down again.
So just to ask you, Lisa, you're saying is that it takes 3 years for a foreclosure process to completion?
On average in New Jersey, when we were at the height of our foreclosure plume, it was taking about almost 1,100 days. And at one point, we're up to 1,300 days to process a foreclosure. Yep.
Got it. Okay.
So we're down. The count is down because our inventory levels are down. You know, the Liz pendants are down, the filings are down, and they were way down before COVID hit. So, you know, there's not a plume there to come out and flood the market, unfortunately. So for us here, I don't see a buyer's market happening for at least a year, unless something dramatic happens, like the rates get raised and, you know, now properties aren't selling, buyers don't qualify. You know, that might happen, but I don't see us having a flooded market of foreclosures anytime soon. No.
Yeah. I mean, like I said, it's one of those things where the longer this thing goes out, the worse it could be, because if someone's not paying their mortgage for the last 6 months, right now they have a balloon of $10,000, and it goes another 6 months, that becomes 20, and now it goes another 6 months, it becomes 30, and we keep digging the hole deeper and deeper and deeper. Again, each place is gonna be different. If foreclosures are easy in your state and they happen within a year, you're probably going to see it happen sooner rather than later.
Right.
I mean, look, we still have some foreclosures here in New York from 06 and 07. So yeah, there's definitely no question that these things could drag out. And if you know what you're doing, you could probably get away with it. But at the end of the day, your average homeowner doesn't know everything that they should know as far as how to operate and move through these situations.
Yeah.
And we see right now, like, you know, if somebody's underwater at this point and they know they can't pay, like I said before, you know, why not sell now when you know you can get more than your property's worth? Take that money to move into your next place comfortably. Know that you have reserves for your rent or to feed your family, as opposed to potentially, if all this does happen and now there is an influx of sales and there are more people looking to move, then what?
Well, I'll tell you, that's interesting you say that, because as I'm talking to people in default, their biggest fear is not finding and being able to get their family into a rental. We have no housing here. You know, there's no properties for sale. There's no properties for rent. When you get a property on the market for rent, you're flooded with applications, just like if it were for sale. So no different. And that's really the scary part for a homeowner that maybe wants to get out from under the debt. They have nowhere to go, you know?
And you know what? It falls back to, right? So everything, that's the cool thing about real estate, is that each variable relies on the next one. So now you also have right now where we can't even evict our tenants that are not paying,
Yep.
right? So how many apartments are they taking up that landlords can't collect their rent for right now, that eventually, once the moratorium is raised, now all of a sudden you're going to have a lot more apartments on the market available. Those that will cause the rental rates to go down for a bit, which may make them feel more comfortable and say, hey, you know what? Now I'm fine. Now I know I could find a place to get into. I know that there's comfort in that. That could cause the next surge, right? So it's all about, really, each thing has to rely on the next. Again, like I said in the beginning, if I say something's factual, I'm lying, because there's no way to know until it happens in this industry.
Sure. Next question. How can we as investors get info on bank-owned properties? Jay, I'm not quite sure what kind of info you're looking for. So if you're here, if you could just unmute and speak up, that'd be great.
Are the banks, Lisa, giving you, you know, hopefully, you know, are you connected with them? Are they going to start to give you some property listings?
Well, it's interesting. We have an outsourcing client we've had for years, and about 4 years ago, their investor client had purchased a tape of NPLs, and they overpaid for it. So as they foreclosed on these properties, they couldn't get their market value. And so what they did was they pulled them all back and put them into a national rental program, with the idea and intent that 3 to 5 years out, as the market values increase, they would start releasing them as they became vacant on the market. And so now they are starting to release those properties to us as they become vacant, and they're getting more than the values that we originally had valued them at. So they're very happy, but they're not coming to market quick enough.
Got it. Okay.
Hey, Lisa, this is Jay.
Hi, Jay.
How are you? Hi, everybody. Good evening.
Hey, Jay.
Yes, as I said, as an investor, I hear about bank-owned properties. What's the best way for me to get a hold of a bank? I mean, what's the process to get a hold of a listing from a bank owned or for bank owned properties?
Well, I don't know that you're going to get a listing from them. The banks don't want to talk to investors, generally speaking. They usually outsource their assets to an out company, and those companies will do one of two things: either throw them on an auction platform, or they'll assign them to a local listing broker and go through the pre-marketing process and get them on the market. At the end of the day, they want to get the highest dollar they can in the market. And
Sure.
right, since it is a seller's market, they're going to want their property on the market. They want to get the highest dollar they can. And we're seeing, for most of them, a lot of the properties we're getting are already in some form of rehabbed, especially the ones coming from the rental program. They're already, they've been painted and they had COs, and any prior issues were resolved, like plumbing and stuff like that, because they've had tenants in them. So the things coming out on the market aren't necessarily an investor quality deal, if you understand what I'm saying.
So Lisa, I'm sorry, Jay, go ahead. I'm sorry.
What are they? So basically, they're just turning them over to a real estate agent or a company, and they're just letting them move them.
Yes, because they know they can get top dollar in the market space.
So, hey, Jay, here's a good idea that you can do to get in touch with the local realtor that probably has that connection. If you hang out on Zillow, Realtor.com, or any of those sites, and you look at the pre-foreclosure listings, or you find the ones that are for sale, and you see the same John Smith on 5 or 6 of them in that area, you may want to speak with John Smith, because he may be one of those people that they reach out to more often than not.
I don't understand. I mean, I understand. What's again? Say that situation again, please.
Sure. So what I'm saying is, if you look at the listings online and you notice that it's a bank-owned property,
Right.
and you see the same realtor on 3 or 4 listings in that same area, there's a good chance that he has a relationship, and that's why he's getting those and that's why he's
Gotcha.
listing those properties. So
I
he may
understand.
be a good resource to speak with, and maybe take him for lunch to see what properties he has that that are going to come on the market, or he's advertising currently.
Okay.
So Max,
and also-
so I'm sorry, Max,
is
repeat the website again so everybody could hear it.
You'll find them on your standard websites, such as Zillow, Realtor.com, not sure if Redfin posts them or not. But any of those regular websites that you hang out on.
Trulia,
they'll have it.
Is there a website where you can go on that just has foreclosures for sale?
Not any one website will show that. The best you can do is go to Zillow or Realtor.com. If something is currently on the market, you'll see it there. But there's no straight up platform for all of them, unfortunately. So like HUD has their listing site, Fannie Mae, Freddie Mac list on their sites, but all these properties go into the MLS.
Gotcha.
how about auction.com? It's not like it's all goes there.
No, it doesn't all go there. If an outsourcer wants to put something on auction, it would be there. And auction.com also will post some of the sheriff sales, but not all of them. But it's not all of the properties that are available for sale that are bank owned.
So Lisa, I'm gonna throw a question at you because I'm an old-time investor. Wouldn't it be paid to call up the banker anyway, ask for that fallout department, see what they got, take them out for lunch if you're a savvy investor?
You can try that. Most of the time, they're just going to push you back to the foreclosure attorney. And if they've already assigned the asset to a realtor, they're just going to push you to the realtor. They really don't want to have these conversations.
Yeah. I've seen the only times that really does work is if you have a large proof of funds you can show, and I mean large, where you're going to really take on a majority of their assets.
Mhm.
Then yeah, you have what to talk about. But if you're just going to go in and ask them for 1 or 2 assets, they're not. They have a lot of properties to move, and they're talking big numbers, so they have to really get them out as fast as possible.
Yeah. The other option, in this kind of market might be to get involved in note buying non-performing loans, NPL tapes. A lot of the banks will have large tapes. Sometimes they do one-offs, sometimes less. that's certainly an opportunity to step in. I have a couple of clients that do that, and they'll go right to the homeowner and try to recast the loan at a lesser value and make it work and try to get the loan performing again. It's almost like a tenant, except you don't own the property, but you're getting the benefit of the income on the note.
Yeah, I'm seeing a lot of people talking about the note buying right now. It seems to be the new fad.
And I did have one more question, if I can, guys, about the
Okay.
buying a foreclosed property. Does that process take typically longer than buying something that's just listed on the MLS?
Before buying a foreclosed property?
Yes.
No.
Is that a longer process to go through? I mean, how long, do you find out sooner that if your offer's been accepted, can you do the deal sooner than a normal non-foreclosed property?
I think you're confusing a short sale with a bank-owned property. When the bank already owns the property, their response on offers is generally pretty quick. There
Okay.
are some clients out there that require a property to be on the market X amount of days before they will entertain offers. Usually that's 7 to 10 days, and it's not all of them. But bank-owned properties will be responded to pretty quick. Short sales can take a little bit of time. Most of the lenders, back when we had the mortgage crisis, they got on top of processing short sales and have become much more proficient at them. Back then it was god awful. It would take months to get answers. Most of them are down to 30 days, 60 days.
Wow.
But we're at 30 days.
Great. Thanks for the info. Appreciate it.
You're welcome. Anytime.
Funny
Paul,
you say that, Lisa, because
what's that?
I said it's funny you say that because realizing when I would be in the real estate office with a bunch of realtors, you notice that it's like all the older realtors would try to stay away from the short sales because I guess they were so scared of what that process was like back then. And now all the younger ones like, no, give it to me. I'll take it. It's easy. I got it.
That's exactly it. I'll take it all day long.
I'll take it. You're telling me they definitely have to sell?
Yes, they raised their hand. I'll take it all day long. Paul, I think you just posted a comment, not a question. The unemployment rate in the USA is 6.7%. And Mary, since the foreclosure process in New Jersey takes about 3 years, what states does the foreclosure process take 1 year or less? So if I don't know all the other states, you're probably going to need to look that up, but I will tell you this from talking to other foreclosure brokers across the country. Most of the states I find that have less than a year have a long, a longer hold process afterwards. So here in New Jersey, it's 10 days after the sheriff's sale that they have to hold the property. In states like Michigan, it's 6 months. And their foreclosure process is relatively short. So you want to check into both, how long the process is and how long the whole period is after sheriff's sale.
And just to add on to that, if you go on Google and you type in judicial states versus non-judicial states, it's not a verbatim like, hey, this is going to be faster versus that one, but more often than not, the non-judicial states are going to be the easier foreclosure process versus the judicial, which are usually take a lot longer.
Right.
I'm just surprised that New Jersey is 3 years because New York is about 3 to 4 years. That's why I was like a little shocked what you said.
Well, when the mortgage crisis happened, New Jersey had put a moratorium on their foreclosure process because there was a couple of cases where properties were foreclosed on that should not have been. I don't know if you remember the cases. I think one was in Michigan. I don't remember where the other one was that made national headlines. And the bank foreclosed and didn't really have the right. They were rubber stamping their certifications and nobody was really checking to make sure they were legitimate certifications. So New Jersey, the judges here said, whoa, time out. We're not going to have this happen here. So they put a moratorium on, and it was quite lengthy, which is why New Jersey ended up behind the rest of the country in their foreclosure process. And it backed everything up so bad that we were at that point 1,300 days to process the foreclosure.
Wow.
Yeah. So now that they've got that process down, there's actually 2 review boards that actually review the file and certify it before the sheriff's sale can schedule the foreclosure action.
Got you. So based upon your professional opinion now, so all the foreclosures that are going to be happening is going to take now until 2024 to actually hit the courts.
It could. But like I said, when we started in March with COVID, we were only seeing,
Empty properties.
4 to 6 properties at the sheriff's sale. That's nothing. Investors were literally killing each other to try to buy these properties. So they've let some through. Some of the counties processed a few in the fall, but like here in Ocean County, they were doing the sheriff's sales out in the parking garage. We can't do that in December, January, February. So they've now adjourned all of their foreclosures to March. But even so, there's only 7 pages, and if the homeowner hasn't asked for their 2 adjournments that they're entitled to, you're going to see more adjournments after that. So I just don't see where the inventory is going to come from this year. Could we see a plume and extra ones in 2 to 3 years out? Maybe. I think we're going to see more short sales hit the market personally, but I just don't know where the inventory is going to come from to correct the seller's market and push it over into a buyer's market at this point.
So where, do you mind me asking, where do you see the short sales coming from?
So as I'm talking to people in default that did the forbearances, they're now getting their letters when they say, hey, I got a job, I'm ready to go back to work. And the bank's sending them their letter saying, that's great. Now you get to make your monthly payment on top of, by the way, you owe us $25,000. Once you go into default, it's a rarity that you're going to pull yourself out. And I just don't see these homeowners being able to do that. So they've got nowhere to go. They're going to stay put. But, in some of these cases, they have equity because it's a seller's market. They'd be foolish to try to, get out from under it.
Correct. Yeah, I would agree with that. I would say, I would say if that was the case, we might not see as many as we would expect, because there is all that equity that they built up over this year that everyone helped, add on to. So even if they do have to sell, they may not end up having to do a short sale. They can maybe still make that money and move to their next place, or at least fund that move to the next place.
Yeah. Case in point, I had an age restricted home that I had listed back earlier in 2020, around January. And it was a short sale all day long. It was a short sale. And we ended up processing the short sale with the first buyer. Something happened and it didn't end up getting pushed through. And when we put it back on the market, in July, now she's got an extra 20 grand and she's no longer in a short sales position. She actually walked away with $6,000. So, if they would just look at the equity opportunities here to get themselves out, but if you don't have a place to go, there may not be an option. That's really going to be the casualty here.
And with the low inventory issue, if they go in and start adding on to now that $6,000 disappeared overnight because they spent $10,000 more on the property that they were going to buy. Right.
So my only hope is that people are out there building homes to help us find, to help us find asses for seats, because we have lots and lots of buyers in the marketplace, but nowhere for them to go.
Us investors are ever so more important. We got to give people a roof over their head.
So new construction might be an opportunity space too. Finding the lots I had sitting on the market for the last 2 years have all almost sold out. So, it's definitely an opportunity. If you can build, know how to build, have the equity to build, there's opportunity there to make some money.
Yeah, but Joe brought out a point before we got on this live event that the values are going to be lower because of what's going to be happening with the foreclosures and all that.
Yeah, but we don't have that problem here right now. So And I don't see that problem happening over the next 18 months in New Jersey. Even if the lenders had a plume of filings this month, you're not going to see that inventory for at least 2 years, at minimum 2 years.
Right, right.
And
That's why I say this thing has not even have begun. It hasn't even begun.
Nope.
It's going to be, unfortunately, a long ride.
Mhm.
And I think what we're all saying and could agree on is, well, furthermore, is to look deeper into your market. Understand where your market is right now as far as absorption rates, right? How many properties are hitting the market versus how many are selling, and what would it take really? And do your own math. See if you think that that's realistic for that market to change. Right now, I'm pretty sure most markets have. Jersey probably has less than 3 months of inventory now, probably 1 or 2.
Oh yeah,
Probably less than 1, if I had to say. Texas is in a similar situation. They used to have, I think it was the Austin Board of Realtors used to have in this time of year about 500 new listings. I think right now they're at like 100 or less. So that's 25%, 25% what they normally see. That's a big decrease. So if you feel like, hey, you're in a really strong market right now for yourself, all the more to you, right? All the power. But if you're seeing that it's getting close and you're monitoring those absorption rates and you're seeing the direction that they're going and you see that, hey, wow, this could really get closer to a buyer's market, those are your indicators, right? What we're speaking right now is all hypothetical theory, what based on information that we have and think will happen. But at the end of the day, you still have to monitor, keep your finger on the pulse, and know what's happening in your market.
Yeah, it's a good time to cash out if you're a rental portfolio owner. Back after Sandy hit down here, we had lots and lots of properties available for $50,000 to $70,000, right? And we had investors buying those properties and fixing them, throwing tenants in. And so now they're starting to look at those properties saying, okay, now's my opportunity to tear them down, build a new construction home, and get even more value out of my purchase with new construction sales. So, there's opportunities. You just have to be creative, think outside the box, and find them. And unfortunately, there's no straightaway process to get to them. You're just going to have to keep networking, talking to people, wholesalers, find those realtors that are good with investors, that know how to identify an investment opportunity. Just make lots and lots of friends and drink lots of coffee.
I was gonna say, make friends while drinking and talking real estate. Don't you miss those days?
I do. I miss the handshaking days.
I know. All this. Well, we're living in the AC now. That was all BC.
Yes. I think it'll go back to normal at some point.
It will. It will.
Yeah. Does anyone have any other questions? And I hope we answered everybody's questions to their satisfaction. If we did not, please unmute yourself and speak up.
Going once, going twice. Sold.
Oh, how did we have one new one from Jay? How does the rental market look? Rentals are up. After Sandy here in Ocean County, our rents went up significantly, and they have not come down since. There's just not enough inventory. We don't have enough housing for people. And so that does remain constant. The rental market is up quite a bit here. So if you can get, purchase something, if you're looking to buy and hold, look at the condos, and, there's definitely opportunity for rentals here. What percent of a rent bump have they gone up roughly? Oh gosh. So I'll give you an example. A 3-bedroom, 1-bath ranch here would have gotten before Sandy somewhere around $1,200 a month. And now we're up to $1,600 to $1,800 a month on those ranches. So I hope that helps you.
I know I'm sorry, I was going to say, I know this is South Jersey, but just to add in there, guys, like to explain how different every market is, Manhattan is the exact opposite, right? They're seeing an exodus. They're seeing an issue of too many vacancies where they're not even able to make their mortgages. So they're taking what they can to get a tenant in there. So we're actually seeing there that there's about, you'll get a discount on your rent plus about 6 to 8 months worth of free rent.
Wow. Wow. I am just going to copy and paste. Somebody asked about the presenter contact, so I'll put Martin in there.
New York will come back, but it will take years. Everything comes back.
Oh, it does. It does.
Yes.
Fortunately for real estate, it's cyclical. You know, even when the market crashes, you still own something tangible. You know, it's always going to come back around. But unlike the stock market, right? You lose your money, you lose your money. That's it.
Yeah. And you know, it's funny, in recessions, you know, rents don't typically go down because there's even a greater demand of houses. So it just stays stable usually,
Mhm.
which is a good thing also.
So
Yep.
just like stocks and real estate, right? So stocks, it's both stocks and real estate, you don't lose until you sell, right? Once you sell for below, that's when you take your loss. The difference is though, is that in stocks, if my value goes down, if you're buying, let's say the cash flow, which is the dividends, you're not getting as much as you would be. But for some reason, real estate's the exact opposite. When prices go down, rents go up, because that means that people can't buy that much and they have to rent more. So you're now switching that up a little bit. So you're almost, as long as the question I get is when do I buy a property? The answer is when you can hold on to it and not have to worry and know that you're okay. If you can hold on to a property, you're almost always going to win, because guess what? What goes down must come up and what goes up must come down. It's the laws of gravity.
Yep, that's for sure. All right, guys, if there's no more questions for the speakers, we'll call it a night. I hope everybody got a little bit of something out of tonight's session. And if you have any further questions, I did post Martin's contact information in the chat there, if you want to copy that down or screenshot it to yourself. Of course, Lynn always knows how to get the speakers, or myself if you have a question as well. Have a great night. Stay warm. It's cold.
Thank you. Thank you, Lisa. And thank you, everybody on the team. Thank you so much for that.
You're welcome. Anytime. Thank you.
Great. Have a great night.
Thanks, guys.
Okay,
You're
bye.
welcome.